BlackRock just buy everyone's Bitcoin? Did Bitcoin break out when everybody was asleep thinking it wasn't going to happen? Can this AI and sovereign debt problem not necessarily crush stocks, although they don't look so good? Alpha Intelligence got the high. We'll show you that chart. But can this debt problem be resolved with much higher Bitcoin? Now, I know everyone's always talking about the decoupling, but stocks are on good support, at least for the moment. And there's no resistance in Bitcoin. Like, even if stocks fall apart, when stocks stop going down, there's no resistance in Bitcoin. Like, literally, if the crisis in the debt market is a crisis of confidence where people just look at, wait, I'm getting ahead of myself. We're going to go over hyperscaler debt. We're going to go over some Bitcoin TA. That's very important. And we're going to bring in 2019 and 2022. I'll show you why. But first, if you need a roadmap in crypto, if you need oil, gold, stocks, all of it, subscribe to this channel, turn on alerts so you know when we're going live. And if the content works for you, hit the like button as we do our evening commuter stream, as you can check this out on New Jersey Transit on your way home. BlackRock comes out today and says, share this. What do we have here? BlackRock believes in allocating 1 to 2% to Bitcoin will improve long-term portfolio returns. Translated into English, most tech and most chip stocks have already made their move. Simple, plain English. They have made their move and they have a debt problem. They have $3 trillion in debt, what's called hyperscalers. Wall Street Journal reports finally that their debt is growing by $1.2 trillion per quarter, which is actually mind-boggling if you think about it. I mean, Uncle Sugar's got to buy $2 trillion. He's got to borrow $2 trillion a year. The hyperscalers are adding $1 trillion per quarter. So what exactly is the problem with AI as it relates to Bitcoin? All right. No one's going to stop the productivity benefits of AI. That's why, AI and corporate world is smoking, but it's not trickling down to the regular guy. So AI is still on fire. These guys have got more software and more versions than anybody wants to know, and nothing can slow it down except what Toby talked about in the YouTube member area, which is the financial bottleneck, because they'll eventually get the rare earth metals. They'll eventually figure out power. Okay. But Toby told you this. Toby also gave you the rails and, how AI is going to work in crypto, which no one is talking about. But in the meantime, the bottleneck is all this debt, because we're going to go over what's going on with the Japanese. We're going to go over TA in the US bond market. Is it over, or is it just going to get worse? This is the perfect environment for Bitcoin, because as BlackRock is telling you directly, if you've made money in AI, the easy money in the hyperscaler stocks has been made. And if you want to buy the dip in semiconductor stocks, which got monkey hammered over the last 2 days, well, good luck. Good luck. Hedge funds sold it to you, and they're at the beach. They're done. So, yeah, they're going to buy the dip. Somebody will. But are you going to make money on that long term, remember what the BlackRock guys are saying. Now, let's, we have multiple ways to deep dive into Bitcoin TA, but let's start with a little, like, how do you track BlackRock? How does a normal guy track BlackRock? Well, I'm going to show you, because I was on with the Alpha Intelligence guy today. By the way, that link is down below. If you clicked it before, click it again, because he explains the value proposition better. So check this out. So why are we looking at 1 hour charts? Because we have a lot of people that, Toby's a buy and hold kind of gal. We have a lot of investors that have longer term bags. I get it. And you're like, Bill, what is going on with this 1 hour chart thing? Okay, well, I would like to get a little bit more into the trading game, or I should say, and if you're looking at a 1 hour chart and you see a huge surge in volume, which is what these gray areas represent, and this purple area here is a volume surge, from the market's past. So, gee, who was down here at 62 and 63? Whoever could that be? I wonder if it's these guys, if it's BlackRock. I mean, because, for the TikTok folks, who can't see this, let me move it around for you. I don't know if I did portrait mode or not. Okay, yeah. There you go. Right there. Who was down there? Oh, that's got to be the guys from BlackRock. Now, there is a little bit of a negative divergence here, so I don't want to get stupid, because there is a lot of support now at 63. So, these guys come in and they start buying Bitcoin. Why are they doing that? Because there's a debt problem. Central banks and sovereigns in the Middle East may have to start selling gold and silver to find liquidity. I don't know. Right? I mean, talking to the Alpha Intelligence guy, he's really big in gold and silver. There's really, according to his work, a lot of room on the upside in gold. A lot of room. I mean, if you look at this 1 hour chart, there really doesn't seem to be a lot of big resistance until you get to like 5,000. And there are a lot of smaller buy signals in the form of these triangles in this neighborhood. So, yeah, gold went down, but are we going to start pricing in some form of policy error? Maybe it's not necessarily monetary policy error. That's usually the legacy term when everybody says that. Maybe it's fiscal policy error, at least in the US, meaning they just spent too much money. And then, of course, in Japan, it's both. It's both. Now, this has not gotten traded. Everybody is looking, a lot of these guys are looking for the huge spike in oil, which has not happened yet, even though anybody in the chat can comment. I understand that diesel in Europe is $2 a liter, which equates to $10 a gallon in the United States for running your motor vehicle. Now, I don't know if that eventually winds up over here, but the strait is closed. I don't know how you factor this in, but, we're heading into Rectember, and there are multiple catalysts, which I'm sure you're aware of. Now, this AI hyperscaler debt problem, that's on the periphery. Like, I've been talking about it. I don't think anyone wants to hear it. Now I think the mainstream media is picking it up. Now, folks, obviously, if Nasdaq gets wrecked, Bitcoin is going to have problems too. But if you look at this, right? Like if you look, this is Nasdaq. This is NQ, the futures contract. Look at this. Look at this system tagging the absolute high at a high volume area. I mean, and it went straight down into this much bigger high volume area, which I'm pretty sure this is the plunge protection team. This is the plunge protection team here. And I mean, you know, folks, I got to be honest with you. You had 3 higher highs, and this is a 9-day RSI. And you had lower highs here known as bearish divergence. Hence the vertical nature of this down move. We are going to have private training on this in Patreon and in the YouTube member area. Like this is only the beginning. The guy has stuff he hasn't even released yet, but I'm starting to understand this in context. Let's think about it. BlackRock comes out 2 days after this top. So who's the seller up here? Who was the seller up here? Who was the seller at the all-time high in Nasdaq? Huh? Who do you think? Big sellers in Nasdaq, followed by big buyers in Bitcoin, a tactical top in Nasdaq, followed by a tactical breakout in Bitcoin. Tactical top in Nasdaq with, oh, wait. Oh, did Bitcoin break a big trend line? Is anybody talking about this? I suspect not. Like, you know, when I look at what's going on out there, I'm not seeing a lot of people talking about this. You know, Princess brought it up, but you know, this is a trend line off the highs, right? Just like basic stuff. And then if you start looking at this closer, I mean, this was like pressing it and it was really annoying, but it didn't back off. And then who came in and broke this out? Oh, gee, I wonder. BlackRock just kind of announced it, didn't they? They kind of announced it, right? BlackRock is moving their portfolios around most likely, or they already have, right? BlackRock has already distributed tech stocks, picked up 1 to 2% Bitcoin quietly, right? I mean, that's what this accumulation could be. There are buy signals down here, okay? You know, if you look at the amount of volume that came in at 56K or 58K, there was a lot of it. There was a lot. I'm going to see if I can try to pull that up here. I mean, there was a huge amount of volume at 58K. There it is right there. I mean, if you look at the 1 hour chart and kind of squish it together, hopefully this calculates. Okay. And as you can see, right. See, here's all the volume at 62. And I think there's even more volume at 58. Who was that? There it is right there. You know, this doesn't have every answer, but somebody bought here. Somebody bought down here on this dip, and somebody bought the big dip here. Who was that? I think we know the answer to that. We know the answer to that. Michael Saylor's stock, STRC, did not look real good 3 days ago. It seems okay now. Well, semiconductors got hammered. So the Bitcoin thing that everybody's all negative about actually held in. What is that telling you? Well, everyone's been calling for the decoupling for, I don't know, since 2016, and that hasn't worked out until it does. Until hyperscaler debt is the thing that limits AI. Because no one thinks there is a limit, and there is. It's the financing. It's not the power of AI. It's not like the internet. It's not like that. Okay, I mean, look at SOX. This is the actual index for semis. Basically, it's the reverse of Bitcoin. They're selling here. They're done, right? This gap down, these alpha intelligence sell signals, they're getting out of this. They're getting out. Can you blame them? I mean, how much does it have to go up before people take their money? Right? I mean, you had the parabolic blow off top that sucked in everybody, retail included. Part of me wonders that if, hopes this doesn't totally break down because there's nobody home until they unwind all this. I don't know if that's Rectember or Rocktober. You don't know, but we're gonna go to PowerPoint where we're gonna discuss. Well, before we go to PowerPoint, we need to discuss the bond market a little, not too much. Okay. So the good news is about bonds for now is that the U.S. long bond, which is tied to 30-year mortgage rates, okay, has stopped going down for the moment. And there's also some bullish divergence in play, meaning prices are making lower lows and the RSI, a 9-day RSI, is making higher highs. There are also some alpha intelligence buy signals down here around 107. Now, we all hope 107 holds because, you've got a monthly low at 107. And if you lose 107, you may wind up with lower bond prices, which leads to higher interest rates because Uncle Sugar is not responsible. We know that. But now we're adding trillions from these hyperscaler guys who are now competing with Uncle Sugar for all the world's money. And you know what? Nobody wants debt from either one of them. That's the thing. No one wants it. Like hyperscalers did 2 trillion, no problem. Now Wall Street's starting to give the whole thing the stink eye. And I swear to God, this has Bitcoin written all over it. In other words, what happens if instead of a crash in legacy just becomes kind of dead? In other words, like bonds move around, but not like they used to. Currencies move around, but not like they used to. Stocks had their parabolic party. And what happens if stocks become just like bonds and private equity and venture capital and all this other stuff? It's like it doesn't move. It's a snooze fest. How do you vent the pressure in the system, especially after Bitcoin breaks a trend line, right? And if you just, before we get to the PowerPoint, I mean, if you start looking at Bitcoin like through a weekly lens, I mean, you're going to find like you're going to run into a Fibonacci circle structure that literally, like, Bitcoin is sitting right on, like, it's broken a trend line. It has volume underneath it at both 62 and 58, excuse me. And if you look at this weekly chart, okay, Bitcoin hit this Fibonacci circle point went sideways through the trend line. And I'm starting to wonder, it's like, you know, this Fibonacci circle line hasn't been perfect as an indicator. I mean, you pulled up short of this one here at the high. So it's not perfect. They love to run the stops like here. This was like 5 weeks of down before it exploded. Like, I realized this rally was much smaller. But what happens if they continue to glide through this trend line after hitting this big Fibonacci point? I also just noticed that we're making lower lows and higher highs on a 9-week RSI. And I pose a simple question. What happens if venting all the pressure in the system comes through Bitcoin? If you have a crash, you have a crash. Okay. We know this. We know this. What happens if you don't? What happens if you don't? What happens if the way they do this is through Bitcoin? Okay. So market update, Nasdaq down close to 2%, Micron down 8%, Applied Materials, both semiconductor stocks down anywhere between 6 and 8%, with Bitcoin up. US 30-year bond yield, 5.3. Housing falling out of bed. The only houses being bought are in like the East Coast and the Midwest, according to Zero Hedge. And, you know, it's kind of all rich people. And everything else in housing is just another locked market. Another market that just doesn't function. How many functioning markets do we have out there? This $3 trillion problem, you know, what's an off-balance sheet financing? Like, what is that? So company A, let's call it Meta, goes out and forms a subsidiary, right? A subsidiary company. The subsidiary company borrows money, issues bonds, and does all that, and then spends the money on the data centers or the hyperscaler projects. The debt is never on Meta's balance sheet. It's on the balance sheet of the shell company, which of course is ignored by everybody because all these stocks are up only. So when it's moving from bottom left to top right, no one cares. And you know what? Hey, it's the same thing in crypto. Stuff's moving bottom left, top right. You don't care. You know, monkey JPEG, $600,000. You don't care. You don't care what's going on. You just want to get in on it. Fine. That's what everyone does. And nobody cares until they do. You know, you got $1 trillion in like leases that they've committed to. You know, that's 4 times what they've already disclosed. Again, this off balance sheet stuff. They have $2 trillion in purchase obligations for chips and hardware, like locked in, like they've paid for stuff before delivery. Oh, and by the way, that stuff's obsolete in a period of a couple years when these leases are, you know, 10 and 20 years. So they've spent all this money on stuff that's obsolete soon. Are they going to get more? Sure. Are they going to get more debt? Are they going to be able to borrow more money? Sure. Sure. What's the only answer to debt? More debt. Okay, fine. Have fun with that. But what's the real trade? What's the real answer? Everybody's looking for the big short. I just wonder if you should be looking for the big long. You know, the accounting story can become a funding story. Their cash flow is already negative, and sort of like, you know, revenue that they're getting per dollar that they're spending is falling because the Chinese are constantly opening up or showing cheaper versions of what they're spending their money on. You know, the Chinese have their way of kicking us in the teeth by having governments subsidize what their companies are doing. It's not cheaper in China. The private sector is just not bearing all of the cost. So, I mean, over here, they can't let stocks go down, right? The plunge protection team and the powers that be cannot have gas at $3 in an election year with a geopolitical conflict that I think we can all agree is a complete mess. And they're actually looking to get out of, which is what all this stuff is about, long deployments and power outages on ships. And, guys can't keep it together after being at sea for 250 days. They want out. They want out. But I don't know if they can get out. So again, how do you create policy error? How do you admit policy error without messing up the stock market? Well, it's easy. You just have the plunge protection team at the Fed hold up the stock market. And you can do that until everybody goes, you know what? I think this has gotten a little bit too stupid, which, happens in markets. It's just the old way of expressing it may not exist. I mean, we could sit here for an hour and talk about all the reasons to monkey hammer stocks in the fall. Earnings are going to come out. I mean, Nvidia earnings are out in a couple of days, right? Which we featured on a stream on Thursday. You know what I'm saying? Like Nvidia, somebody said this, Nvidia is like the Fed of AI. In other words, borrowing, lending money against chips, going out and taking their cash flow and investing, you give us a certain percentage of your company and we'll give you chips and all of that. Yeah. Interesting. It's suppress, you can do that to suppress a problem. And that's okay. Because, AI and Nvidia will all continue to function, but there's no resistance in gold. There's no resistance in Bitcoin. There's no volume zone in Bitcoin. I don't even know if I said this. There's no volume zones in Bitcoin until you start getting into the 70s. And I know we're all asleep. Like it's so boring. It's painful. And it is painful because it does feel a little bit like 2018, where Bitcoin just sat at 6,000 for like 2 months. Very similar time of the year. It was like September to November. Very, very, very boring. And it eventually waterfalled lower. It actually keeps me up at night. It does. However, if you look at what happens, I'm trying to get it to come up here. If you look at what happens, if say Bitcoin got loose, right? Bitcoin starts taking out, say 66. Where's the next big chunk of resistance? Like where's the volume? Okay. So don't laugh. Because of the volume, this is the micro Bitcoin futures contract at the CME. So BlackRock buys here, BlackRock buys here. The zone for resistance in Bitcoin is between 74 and 84. What? 74 and 84? You tell me who's talking about 84 or 74. Forget about 84. What about 74? What about 71? Who is talking about that? Absolutely nobody. Like in some ways in Bitcoin, like, if they kill Nasdaq, Bitcoin will go down and test the BlackRock support level at 62. Fine. What happens if everybody is so focused on 62 and 64 and nobody remembers what a Bitcoin breakout looks like? They're all looking for 40K. No one thinks they have to buy it. And the hyperscalers are giving them every reason to buy it. Every reason to buy it. So Bitcoin breaks a trend line. Okay. It's holding above the trend line. I don't know about a retest yet. That could be 62K if Nasdaq loses its mind. Okay. Bitcoin is 50% below, the October high from last year. The drawdown is 9 or 10 months old. Everyone's looking for a bottom in October. Everyone's looking for a bottom in October. I mean, you can watch CNBC now, and everyone is telling you to have your Bitcoin portfolio set up for October. And BlackRock just told you to set it up now because they came in early. And the hyperscalers may be doing all of us a favor. Now, I don't want to pull the Billy Boltard thing, but the hyperscalers are giving you a window. They're giving you a window, and they may be killing legacy assets. So again, here's the trend line with the trend line break. Okay. And, there's still a lot of negativity, right? The downtrend is everywhere in Bitcoin. It's just sitting there. You can't get excited until it gets above 67. But the question becomes, should we be talking about 40K or should we be talking about 97K by the end of the year? Like what should we be talking about? If you were an analyst or a trader, should you talk about buying a dip at 62 or should you be talking about buying a dip at 52? It's real interesting. Like this was the weekly chart I wanted to show, right? These bear markets, when you start breaking the trend line, like this was 2018 and 2020, you had this nasty waterfall lower. This was a slow break of a trend line. This was a little bit faster, but you still had a lot of range before. I don't know, man. It looks like the exact same thing all over again. It doesn't feel that much different. I mean, normally you want to see like a give up trade. You want to see, the structure follow. In English, that means, are you making higher lows? Like, are you going to 62 and then attacking 66? Does the retest to 62 hold? Do you have macro behind you? I mean, right now with the long bonds, the only thing macro Bitcoin has going for it is that it's not fiat. It's not legacy. It's outside the system because the decisions that they've made are unbelievable. I mean, when Bitcoin in 2019 was at 3K, you had a famous trader say that the move to 4K was a dead cat bounce and that it was headed to 1,200. I wrote a piece about 1,500, and I've told you this a million times, and then I turned it around the next day. So people did give up, right? They gave up at 58. The structure is improving as it moves through the trend line. All right. And, I think we have intense disbelief here. I do. It's a little bit like FTX, right? FTX had a low of like 15, 16K, sat there for 6 months. And that was November of 2022. And by April of the next year, it was at 31K. 6 weeks before the breakout of the trend line, Standard Chartered, which is a ultra bullish crypto house, said Bitcoin was going to 5K first, citing a collapse in investor confidence in digital assets, which is basically a nice way of saying it's not wrong that people thought that FTX was the end of crypto. I argued it was the beginning of crypto because you liquidated the entire ecosystem so far, so fast. And unlike 2008 in legacy, crypto didn't necessarily need a bailout. It did not need a Fed bailout. Matter of fact, the Fed was kind of hiking, or, things were hawkish at the time, and crypto survived. Crypto didn't rally after FTX, but it didn't go to zero. And if there was ever a reason for crypto to go to zero, that was it, in case you weren't there. Oh my God. The whole system was hyper levered. People were betting with customers' money. I mean, it makes whatever's going on now look like a picnic. It's like a picnic now compared to then. This is just sad because we, as Raoul Paul says, and Toby says, just a delayed payoff, right? This never should have happened. You had the Binance black swan, and then this whole market just cracked because you had rates higher for longer, and then you had fiscal policy error and geopolitical policy error. No one thought this would ever happen, and now we have to sit here like it's 2018. Back then, it was awful. It was a terrible hangover after the ICO boom, and FTX was terrifying. This is just sad. This is just sad. Like 2018 was a punishment for stupidity. 2022, the whole ecosystem got liquidated. And in this case, everyone's hopes and dreams, America as the crypto capital of the world, all of those hopes got dashed. I mean, we were ready. We're still ready. We just went from euphoria to depression. It's an emotional bear market. Yeah, it's down 50%, but Bitcoin goes down 50%. It went down 50% or 40% once on the way up in 2017. I mean, back in 2022, the ECB published a blog post arguing that Bitcoin was on the road to irrelevance and rarely used for legal transactions. So you met every single definition of like a bottom, right? Every single one. Right. Now, when breakouts, kind of don't work, it's like two cases that looked identical that went the other way. In early March of 2002, things looked like they were going to turn around, like it was over. That was around Celsius. And of course, it wasn't because everyone thought it was over. And then it went to 20K. That was from 48 to 20. And of course, in 2018, as I noted, everybody thought that that was the end. Novogratz came out and said, you got to buy Bitcoin at 6K. And he was right. The only problem was there was a miner panic because big miners were able to get equipment that rapidly lowered the cost of production, putting out of business every small miner who had to panic liquidate Bitcoin because they were going out of business. Those were the two big fake outs. Now, is this the big fake out? Maybe. It's the big fake out if Nasdaq is wrecked. If Nasdaq's going to get wrecked, if semis are going to get wrecked and they're going to force everyone out, I mean, who are we kidding? If there's a problem in bonds and there's a problem in stocks, if there's a problem in bonds and a problem in stocks, and they don't trade it like a crash, okay. So, I mean, that's, now where are we now in Bitcoin versus then? Like, do we have a complete give up trade? 58 could be a give up trade because they did all the geopolitical panic all at once. Has there been any uptrend follow through? Of course not. No. So that's not a perfect bottom at all. You don't even know if it's a bottom. Has there been a retest? Well, we don't know yet. The retest would be 62 or 60 after this breakout. I suspect you're not going to get a huge retest beyond 62 because BlackRock is down there. They just told you that. BlackRock is down there. And not only is BlackRock down there, but people who do business with BlackRock are probably also down there because all of these sharks, they move together. Do you have a macro tailwind? Right now, no, because interest rates are going the wrong way, which is why, if there's any relief, ironically, a down move in Nasdaq, that's scary enough to create a bid in bonds. Or if somebody has to come in and bail out the hyperscalers with the printer, which, they cannot let the hyperscalers fail. If the hyperscalers fail, Japan fails, and then our bonds are after that. Nobody can fail. Nobody kid yourself. The bigger they tell you this problem is, the bigger the print job they're eventually going to have to do just to keep it all rolling. Because what's the only answer to debt? More debt. And then when they can't do more debt, they have to do more printing because AI is too big to fail. So do we have a problem now? Yes. Bonds are a problem, which is why I put the chart up. So do we have any macro help for Bitcoin? No, because if we did, there's no resistance. Bitcoin would be at 74. How does that change? I don't know. Maybe it changes in September when you flush one of these markets out and then allows everybody to kind of calm down about the Fed. Everyone thinks the Fed has to like raise interest rates to stop the bond market from going down. You're like, wait a minute, rates higher, that makes rates lower. Yeah, people think the bond market's upset about inflation. So the Fed tackling inflation is good for, bonds like that, long-term bonds like that. This is not about inflation. Inflation is being created by a geopolitical problem. Bonds are going down and rates are going up because there's too much capital from too many borrowers that are not creditworthy. They're all over levered. That includes Uncle Sugar. So do we have the macro help for Bitcoin? No. Right now, could we get it? Oh, yeah. And I don't know. There's only partial disbelief. YouTube was crypto is dead. And then, crypto goes up one day and everyone's got the green thumbnail out. I did the same thing. People are still skeptical. Okay. The crypto media is bullish. The SEC is trying to come out and talk up the market, trying to force the Clarity Act. There are a lot of constructive things in crypto and Bitcoin, not to mention tokenization. The amount of capital. First, everyone was like stablecoins, and I never really bought into all of that. But if you have stablecoins flooding in because they want to do tokenized assets, and I've also talked about, 24-hour trading, dumping certain markets on your head, just getting everything out of fiat. People don't really think about this idea of putting things on chain because you can trade them in a different currency like Bitcoin. Like you could price Japanese government bonds, US government bonds, stocks. The only way to make them interesting may be to price them in Bitcoin or Ethereum. Has anyone thought about that? That when they do tokenization, they're trying to get out of the currency. They want out of the currency. What difference does it make? Oh, we're going to go trade it on chain. Okay. Most of the sludge they can trade in legacy. And other than trying to dump this on a whole new audience, they're trying to trade it in a different currency. Everyone's trying to get out of the currency. That's why real estate's up. That's why stocks are up. Why do you think stocks are up? Why do you think everyone's like, oh my God, the valuations, blah, 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 blah. It's not the valuations of stocks on the upside. It's what they think of the currency on the downside. They're trying to get out of the currency. At what point do people go, okay, yeah, I'm done getting out of the currency and legacy. That trade doesn't have any upside per BlackRock. Now I'm going to go over and I'm going to get involved in Bitcoin. And yes, while we're doing all the laughers, don't forget to throw in ETH. Don't forget to throw this in, right? It's all dead. It doesn't work. It doesn't move. ETH has a staking mechanism. There's an incentive to hold ETH to get yield. And if they ever altered the incentives where, ETH, because of increased activity and a possible adjustment to what stakers get, even a subtle one, you could have ETH all of a sudden going from an inflating cryptocurrency, which keeps it down, to something where there's a supply reduction or a supply shock. You're going to have a supply shock in Bitcoin because all these characters, Goldman and BlackRock, have invented these funds where they sell derivatives, they sell bullish bets, And if Bitcoin ever started to move, they'd have to cover all that. So can you imagine a day when everybody goes, I'm done with the currency, I'm done with fiat, I'm getting into Bitcoin. Everybody has sold bullish upside bets in Bitcoin and has to cover, and nobody's long ETH because nobody thinks it can go up because they've been chasing semiconductors instead. I saw some guy talking about buying a dip today in a chat room in a Robinhood meme coin. You know, what happens if big crypto assets start behaving like meme coins? Now, it might be down and then up, but is any, like this AI hyperscaler debt thing, we were on this a week ago. Toby was on it before that in the YouTube member area, and it's in Patreon in a very big way. John Legend has got a little like green shoots thing. I love that. That was a 2008 thing where they weren't going to be bullish. They said, the forest has burned down, but now we see little green shoots or green plants growing out of the ash. Everybody has given up on all of this, and the SEC is pushing this, and tokenization is about changing the currency. Are they telling you that today? No. Will that be in the media eventually? Yes. Look at Hyperliquid. Hyperliquid on the 1 hour chart. Okay. They rallied it up to resistance. Look at this buy signal, right? It breaks out. There's a trading catch of the high for TikTok. There we go. We got it. You catch the high, you catch the low, you catch this move. Now they're starting to come in. The alpha intelligence thing is starting to come in with like a buy the dip mentality in Hyperliquid. Now, who's going to win that battle? I don't know. But Hyperliquid was outperforming, and then they hammered it. Now it's coming back. And the system is like buying the dip. Tokens where you have an incentive to hold them. This is from the MV equals PQ stream. If you have a token that has an incentive to hold it, when these AI agents come in and start moving money at a rapid pace, anything that has a HODL or staking mechanism or incentive to hold it, like Hyperliquid, where you get paid a portion of the trading fees, these things become immensely valuable. Somebody's asking if we can check near. We sure can, bro. We sure can. Because you know what? Eventually, people rediscover this. Eventually. So, near on a 1 hour chart, still, going sideways in a mind-numbing kind of way, right? With near at the lower end of its range. Not exciting. If you look at the daily chart, I mean, some of these coins like near, no one wants to see near go from $1.60 to $1.43, but there's a volume zone in here now. There's a lot of volume. What we don't have is one of these triangular buy signals right now. Near is making a whole bunch of new lows. It's not clear what the RSI is going to do, but like everything else, right? Near goes straight up, and then they spend the next, 2 months washing people out. That is the pain of the bear market. However, there's a lot of support underneath the market. So if they waste crypto, right? If they waste it, they're gonna push it right into an area where the BlackRocks and all these other characters were interested in buying it. Zcash is like pinned against some of these levels. Like that's why Zcash, I like the fact that Zcash is above 488. That's a level that we had in Patreon. I want Zcash and Bitcoin to hold on, right? Grandpa Keter, welcoming Crux of Crypto. Hope all is well. Smash those likes. Okay. Crux of Crypto. Very smart guy, by the way. Okay. BSV says, I think people are looking at Solana. They've been building RWA and DeFi. What do you think of Solana's fundamentals? Okay, well, Solana is a great business model for validators. In other words, if you run a Solana, if you help operate the Solana network, you basically print money. Because even though fees on Solana are small, the volume is huge. Now that value comes back to you in the form of Solana, which you may dump and get dollars in return. Hence, Solana not going up. Now, if Solana ever increased fees, the incentive to become a validator would be so high that there'd be so many people piling into Solana, it would be insane. I mean, right now, Solana is, at one of these high volume zones with one of these sell signals. So, you would love to see Solana break 77. The next big zone is 79. But you have to respect this in the meantime. In other words, Solana has the ability to increase fees. Probably that's a lot easier for Solana to do than it is for ETH to reduce what stakers get in order to cap the inflation. So it's easier for Solana. Long term, I mean, there's more of an incentive to hold ETH because of the staking yield. That's the way it is right now. There's more. And as traffic would pick up on ETH, in theory, there would be more activity and more of a burn. So personally, I don't think you lose either way. Once these agents come online, there's a ton of tokenized assets on ETH, and there's a ton of stable coins on ETH, and Solana has its own internet capital markets. It's not either or, it's both and. AI agents will not be tribal. This whole thing, like which crypto is best, is it the XRP Army? Is it the Link Marines? That is over. It's beyond over. AI agents will not care. And everybody is talking about how AI agents or AI is improving productivity in legacy. I mean, this is happening. You can talk about the hyperscaler debt. I probably talk about it too much. Dude, economic output, earnings, all this stuff is breaking out because of AI, right? Because people are leveraging it and they're using it. How long do you think it's going to take for that to come over to crypto? And you've heard this. And in the YouTube member area and in Patreon, we are pounding the table on the coins to get into to take advantage of this when it happens. Like we put forth some coins on the last podcast, and that wasn't a shocking revelation in terms of the coins. But the reason to be involved in those coins was much different than in the past. Mainly because of MV equals PQ. People are getting hip to this. By the way, that Alpha Intelligence link is down below. We're going to be a guy named T-Bone said that he wanted, requests for a member. He wanted like a Friday stream where we went through a cross section of markets. Okay. I'm actually going to do the stream with the Alpha Intelligence guy. And then we're going to put the education in Patreon because, okay, we're looking for a triangle in a box. That's one part of this, but there are nuances to this. There are nuances to understanding the short-term volume. Now we have a request to check Theta, okay, which I'm happy to do. It's interesting that the system was buying before this big spike in Theta. This is a 1 hour chart. This, of course, also allows you to look at dead cryptocurrencies just as an aside, because I'm sure when we pull up the daily chart of this, there may not be much to say. I don't know. Like Theta had a couple of buy signals. Some of them worked out a little bit. We kind of hope for the sake of the Theta holders that they work out a lot of bit. But this makes it easier. Like, for example, if I pulled up Lux Algo, this would be at the discount zone, but it's been at the discount zone for 5 months. And I use that too, but I'm demonstrating that, like, this told you like when to take a shot on the daily chart for TikTok. Let me see this over here. This told you when to take the shot. The divergence helped. Basic RSI, right? Anything that has a mechanism that requires you to hold it. This is where you're going back into the tokenomics of all your projects. Like governance tokens used to be a joke. They used to be a joke, and they still may be a joke. However, if there's an incentive to hold the governance token, and maybe there's some utility, or maybe there's a staking protocol where the governance token is not being flipped or flinged back and forth, slinged maybe. I think you have to look at this stuff. I don't know if it's Theta, but I think you have to look at anything that has this kind of mechanism, anything that has a cross-chain mechanism. Yes, I'm talking about altcoins. Yes, I'm talking about crypto. Yes, I think it still has a value proposition beyond my usual pep talk, because now you're bringing in the velocity of money, which we discussed in a prior stream. And then we discussed this idea of, anything that requires you to hold it. And then we're bringing in alpha intelligence to try to find the volume on the 1 hour chart. In other words, really the question isn't, the question is, can you look at data? Can you look at near? Can you look at these? Of course I can. I'm here to help you, right? I got a discount on this thing, for the link and all of that. I got that. That's to help you. So you know what to get rid of, but more importantly, when the stuff that you own is going to wake up or not, right? Volume starts coming in, it's waking up. You're like, oh yeah, let me get on that. Let me hold on to this, buy more, whatever. Who the hell knows what you should be keeping and not keeping? If you have 4 coins in a bag and volume picks up, and 4 coins in a bag that don't see any volume in that period, what? There's going to be no volatility in September or October? You got to be kidding me. Diesel is $10 a gallon in Europe. There's going to be volatility. Just it's the question of which direction. And even if they smack Bitcoin, does it come back quickly? Right? Because BlackRock's down there. BlackRock's got it right now. They told you that. So that's why I started with BlackRock. I'm ending with BlackRock. They bought it. They own it. Some of these sharks, they swim together. Or wolves. They travel in a pack. They sat there. They rounded up everyone's Bitcoin. Yes, YouTube is bullish, but there are a lot of constructive things out there that if they ever got unleashed, they could be very powerful. Even if you have to tolerate hyperscaler down move, you know what? These guys have been parabolic on the upside for 10 months while we've sat here on Prozac. Our comeback is imminent, whether it's from lower prices or whether it's from right here. And some of it is happening right before your eyes, hence the volume, hence the stuff that I showed you from Alpha Intelligence. Please subscribe to our premium services, right? Toby has been right about not dumping this market and shopping in AI. Patreon has had killer TA And the TA is only going to get better with Alpha Intelligence. I'm only on the air 1 hour a day. So we're going to have more in Patreon. And the link for Alpha Intelligence is down below. I'm learning it. I'm teaching it as I'm learning it. And there's going to be a lot. There's going to be a lot more. Because now when they start coming in, like it comes off the Lux Algo discount zone, when it starts coming off the discount zone and there's volume, we're going to know this time. This time we're going to know. We're going to be able to trade it, etc. Okay, let's welcome who's here. All the members and Spartans. Bull Runner jumped in way early. Richard Barry and his crew, Trading Gods. Thank you. Benjamin, Odd Dark, a member. Shelly Farmer Allen, the one-woman hedge fund. Right? Grandpa Keeter in the house. John 316. All the people who I love to see who support us. MYKU. Hello. Indie Rock Crypto in the house from Western Michigan. Okay. Once I see 58K, I'm putting my finger on the button and I'm going to buy. Crux Crypto, welcome. And Supermax. GF. Bill, you started your leverage trading career this cycle. Just kidding. Dude, I am not doing that. You know, if you do, Novigrad said this perfectly. If you do leverage, you got to have stops. You want to hodl, that's spot. Okay. You know, leverage you do on the way up when it's going your way, or when it's obviously gone down so much, it's exhausted. I don't think we're at any of those points. Okay. Ladies and gentlemen, that is the market update for tonight. We will see you tomorrow.